So what's in store for China's trade sector in 2019? Well, Sara Hsu, Associate Professor of Economics at State University of New York at New Paltz, joins us live with more. Welcome, Sara.
Thank you, Rachelle.
So what would you say are the main takeaways from this latest trade data, and what should we read into it?
Well, we can see that really both imports and exports are starting to decline in terms of growth, and the trade war is really starting to hit. In months from the time that the trade war began in July of this year until November, it didn't look so bad. The U.S. was still importing many goods from China in order to gear up for the increase in tariffs starting in January. But ever since the G20 meeting that happened in December and the temporary truce of the trade war, we have seen that there's a huge decline in both the exports as well as the imports. And so this doesn't bode well for 2019. I think that we would expect to see some more negative news.
And obviously the trade war taking up a huge part of the headlines. Are there any other factors at play, though, in what we're seeing in this foreign trade data?
Yeah, I think that the trade war is a big part of it, but also China is going through a slowdown. It was battling an economic slowdown even before the trade war hit. And China was already in the throes of struggling with its deleveraging campaign to reduce debt. Now, in order to combat the trade war, it's going to have to reopen its faucets for lending to all sorts of enterprises in order to stimulate growth. And that could further increase the risk associated with high debt levels.
And we know that since the trade surplus is this lens through which President Trump is really assessing the trade relationship with China, why do you think then the surplus with the U.S. is increasing despite the ongoing tariffs?
Well, it's increased because the imports and the difference between the exports and imports has widened, although those numbers have fallen. So the difference itself has continued to increase, if that makes sense. And so, I think that we're going to continue to see a surplus, and it's likely that both of those numbers are going to continue to fall, both export growth as well as import growth.
Now, are there particular types of exporters and importers that are really suffering the most at this time?
Yes, we do see that a lot of the automobile manufacturers in the U.S. have suffered. We see that agricultural producers, especially soybean farmers in the U.S., have really suffered due to a sudden drop-off in exports of soybeans to China. And we also see the technology sector suffering as well. We haven't really seen it hit China as hard in terms of specific industries, but we have seen that it has hit the private sector harder than the public sector. It seems like with a lot of enterprises having to scale down their workforce.
Now, obviously, the December data was a snapshot, but overall, as we look at China's foreign trade data, we're obviously seeing a lot more growth in some other regions. Tell us more about that.
Right. So, China has done well in some areas, but it's also, performed not as well in other areas. There's a lot of diversity within the economy. And, even though we have seen the widening of the surplus and decline in trade, there are still some bright spots in the economy.
And so we know that China's General Administration of Customs, he's been warning that the country's foreign trade growth could slow in 2019, and he listed these external factors as being the issue. So what would you say are the biggest headwinds as we're kicking off 2019?
I would say that, China is probably going to experience a lot of headwinds if the trade negotiations don't go through. Even if the trade negotiations are stalled, maybe there's a truce that's called from March 1st onward, there's still going to be a lot of headwinds in terms of declining external demand. And China is already facing a lot of declining internal demand as retail sales decline and consumer sentiment is declining. And so there are a lot of headwinds to deal with, also the deleveraging, and there's a lot to be concerned about at the moment.
Now, what about opportunities? Obviously, for every downside, someone tends to be making money somewhere. Are there any opportunities to be had during this time?
There's still some IPOs that are going on, and some companies are doing well. Some firms, especially in China's fintech sector and other high-tech areas, are still doing relatively well because they continue to have government support, policy support. And so there are some bright spots. So that's something that should give us a cause for happiness.
All right, thank you so much. Sara Hsu there,
Thank you,
Associate
Rachelle.
Professor of Economics at State University of New York at New Paltz.